Welcome back. General Motors this morning cutting its outlook for 2025 because of a $4 to $5 billion dent in profits over tariffs. In the company's shareholders' letter, the company writes, quote, incorporating the positive impact of the administration's action this week, we are updating our full-year adjusted EBIT guidance to a range of $10 to $12.5 billion, including a current tariff exposure of $4 to $5 billion. General Motors reported strong earnings earlier this week, but withdrew prior guidance and pushed the investor call back until this morning as a result of uncertainty over tariffs. We did get some clarity earlier in the week on Tuesday when President Trump signed a pair of executive actions relieving domestic car makers from paying stacked tariffs. Joining me now with more on all of this is the CEO of General Motors, Mary Barra. Mary, it's great to have you this morning. Thanks so much for spending the time.
Well, it's really great to be here with you today as well, Maria. Thank you.
Tell us about 2025 and what you are expecting as a result of these tariffs.
Well, as we said, we've updated our guidance to be from an earnings before income, interest and taxes, EBIT, of $10 to $12.5 billion. And that does include a $4 to $5 billion tariff impact with what we know now. We're very appreciative that the president took these actions. We've been in ongoing conversations with him, frankly, since before the inauguration. And the administration has really taken the time to understand the auto industry, understand the U.S. auto industry, and the complex supply chain, the capital-intensive nature of our business. And so we're really appreciative that he is taking these steps because we're very aligned on the mission to have a strong manufacturing base, have a strong automotive industry in this country, and to make sure that we have a level playing field around the globe. So we're aligned from that perspective, and we really appreciate the clarity that you had also talked about that is going to allow us to continue invest and grow our investment in this country.
Yeah, and that's really what I want to talk about because, of course, you have incredible credibility, not just on Wall Street's watch, but also from within your company. I mean, your father was a GM factory worker. You worked summers at GM factories. You've been leading this great American company for so long. Have you ever seen a period in your time here in this business and as a student of this industry as what you've seen recently in terms of how tough it's been?
Well, thank you so much. I am super proud that I followed in my father's footsteps, and together the two of us have over 85 years with this company. And I did grow up in manufacturing, and so it's near and dear to my heart. I think what we're seeing, though, is a shift that is necessary because for decades we've not have had a level playing field. So with the clarity that we received on Tuesday, and that's why we waited to have this call, because we wanted to have that be official so we could update our guidance. And we're going to work because, as you well know, what the announcements made, they expire, parts of them expire over the next 2 years. But now we're really focused on what we're going to do to grow our manufacturing in this country and build on the fact that we already have more employees in this country than anyone else. We have 50 manufacturing facilities that include 19 assembly plants. And so we're going to continue to build on that and support the 1 million people in this country that depend on General Motors, our employees, our dealers, and our suppliers.
But at the same time, Mary, at the end of the day, you are facing a $4 to $5 billion hit to earnings because of tariffs. You may have the clarity that you don't have stacked tariffs anymore with tariffs everywhere from, the auto parts to the aluminum and steel, et cetera. But you are facing these tariffs. So something's got to give. What are you doing to offset this? Are you going to raise prices? Are you going to eat the cost? Are you going to change something? Are you going to cut into the EV production? What's the plan?
Well, one of the things, and we've already started to do this, we've added the capacity at our Fort Wayne assembly plant in Indiana that builds full-size trucks that have added workforce to be able to build 50,000 more trucks in this country yet this year, and that's on an annualized basis. We're continuing. We have already built 2 battery cell plants in this country with our joint venture partner. We're in the process of building a 3rd. Already our supply chain, and this is something we started doing a few years back, back is we recognized we needed to have supply chain resiliency. And over the course of the last 5 years, we've increased the number of parts going into our vehicles assembled in the U.S. by 27%. Our reliance on China for parts, in some cases, they're the only place where the parts are available. That's now down to less than 3%. So our overall USMCA compliance is already at 80%, over 80% actually, for the vehicles that we assemble in this country. We're going to continue to work with our suppliers to grow that, as well as making more announcements like we did with what we're doing in Fort Wayne to leverage the extensive footprint we already have in this country. So we have a lot of actions that we can take. From a pricing perspective, we've said and we've included in our guidance, we think pricing is going to stay at the same level as it is. And I'm really proud of the GM team because we have such a strong ICE and EV portfolio that gives consumers choice, that, and we've been able to maintain discipline and not have high incentives because our vehicles are in demand. So we're going to keep focusing on the customer, giving them choice, and we think there's a lot we can do to impact those tariffs by continuing to increase our U.S. content and continuing to build even more cars in this country than we do today.
So what happens to the vehicles that are imported from Korea? What are your plans there in terms of those vehicles? Are you going to lessen that? You've got to deal with the unions in Korea, which, of course, is somewhat militant. What are the plans?
Well, we're evaluating that right now. As you know, there's conversations going on between the U.S. government and South Korea. We want to understand what happens there, and then we're going to make the best decision for our customers and for the company. And so we're evaluating that. I don't have anything to announce there, but I can tell you our entire footprint is under review, and we'll make the right decisions when some of those decisions are made as well.
And of course, you're talking about vehicles that are incredibly popular, not just because they're great cars and trucks, but because they're affordable. So are the plans to raise prices in any way this year? Well, again, we're going to respond to the market as we always do. I mean, we're in an incredibly competitive market. I mean, companies change pricing on a monthly basis, if not more frequently. So we stay and monitor all of that. But again, we're going to rely on the strength of our product portfolio and the customer interest. In the first quarter, we grew share by 2%. So I think we have a strong product base, and there's decisions that we can make as we look at our footprint and some of those products that are at the very affordable end to make sure that we've got a portfolio that the U.S. customer is going to want to buy and that we're doing it in a way that minimizes our tariff impact. Mary, what can you tell us about China? I mean, the quality has really picked up, I'm told, and of course, they're also moving so fast from concept to production, 1.5 to 2 years or so. Are you expecting China to have vehicles in the United States to compete with GM here? Well, Maria, we look at every competitor around the world, and I think the competition coming from China is very fierce. But I also would say, and it's well known, that they're subsidized by the Chinese government as they first have wanted to use the excess capacity they have in their country. And so I think it's very important with the trade policy that's happening is that we make sure there is a level playing field there, because manufacturing in this country, and when you look at the technology that is on vehicles today, there are many implications from not only economic security, but a national security perspective. So I don't make trade policy. I need to make sure that we're as competitive as possible. We understand, and we've benchmarked and actually torn down Chinese vehicles. We think, part to part and technology to technology, we're on par. So we just have to make sure that, we look at that, and if they're allowed to bring vehicles into this country, the subsidies that are provided are understood, and also that we take into account the national security provisions. And what are your plans for GM in China? Tell us give us a status check there. Well, from a China perspective, our business is vehicles we build in China for China.
and the technologies are there as well. We've seen a shift because over the last handful of years, there's been over 100 new competitors, domestic competitors, into the China market. Only about a handful of them are actually profitable, but that has made a total shift in that market. So we think there's still a place we can play because of the strong brands, Buick and Cadillac, that we can play in that market, but it will be China for China. And I would say the equity income that we earn from that business largely comes back to the United States and is reinvested right here.
And do you want to say anything about the EV business, Mary? Because everyone's basically saying, look, something's got to give. Maybe you need to take some focus off EV, even if it's just temporary because of this moment in time. You got through the COVID period quite well, even though that was difficult. Would you compare this period to then? And what about EVs?
We did, and I'm really proud of the team for how we managed through COVID and then the semiconductor shortage. I would say this situation is much different. We understood the issues in a matter of months. We've been able to have good dialogue with the administration and the president to make the right decisions so we can continue to invest and have a strong U.S. base. So I would say that that is really the focus of where we've been from a U.S. perspective. As we go forward, we're going to continue to build on that.
And when you say build on that, are you saying that you will keep your product investment at these levels, or are you changing that?
Well, great question, Maria. What we're doing now is we have already over the last couple of years, because EV demand has not reached the levels that we thought it would, and so we've already scaled back. There was a battery plant that we were bringing online that we have actually sold back to our JV partner that they can use for other demand that they have. We are also really focusing our investment on EVs right now on improving efficiency and improving the price point, because as we know, EVs are more expensive because of the battery technology. And so we're investing in changes that we need to make to get our EVs go from variable profit positive to overall profitability. That's where our focus is on EVs, and we'll be guided by where the consumer demand is in what investment that we make from an EV perspective.
And actually, I was talking about product spend overall, Mary. In terms of your product spend, you've got to keep spending on products, keep innovating. Your product spend overall in 2025 looks like what?
It'll stay about the same. We've said it's between $10 and $11 billion of capital investment, and we have not changed that or our engineering and R&D budget, because you're absolutely right. We have to keep innovating and have the best products out there with safety technologies, with technologies that allow the consumer to be more connected than ever before. And we're going to continue to make those investments because that's so important for our future.
Mary, real quick before you go, yesterday we had a contraction in the economy. You've got an incredible vantage seat to tell us about the consumer. Are you seeing cracks in the consumer? How would you assess the macro story, Mary?
Right now, for the first quarter and actually through the month of April, we saw a very strong consumer. And, there's been some talk that some of that is pull-ahead demand, but I will say in that we've been able to grow share and outperform the market with that. So currently today, we're seeing a very strong consumer.
And you have expectations for the year?
We're making our assumptions based on as the industry gets clarity, and we have a very strong portfolio, that we think this can still be a good year. There's a lot of policy issues that are under discussion right away. Again, I'm not an economist, but with what we see right now, and I will say if demand goes up or demand goes down, we'll react to it. We've demonstrated that over the years that we can be very responsive and agile to the market.
Mary, we so appreciate your time this morning. Thanks so much.